stocks trading higher for the first time in 4 days. However, the market is actually moving a little lower than we've seen earlier in the session. You can see still hanging on, up 16 points. This as investors try and consider this nuclear showdown with North Korea. Meanwhile, a benign rate of inflation means it's less likely for the Fed to raise rates. Well, that's what some are thinking. Joining me right now, our very own Nicole Petallides, who's standing by at the New York Stock Exchange, along with Janney Chief Investment Strategist Mark Luschini. Good to see you both. Mark, starting with you, how do you think investors are interpreting the whole North Korea thing right now?
Well, I think what you're seeing a little bit of right now, Trish, is in fact investors squaring their books going into the weekend, not knowing what could happen over the course of a couple of days if these rhetorics that we've had coming out of both sides escalate into something that is more confrontational
really? You think they're squaring their books? I mean, we're still up 16.
Well, that's good, and hopefully we hold into positive territory. But I think investors are a little unsettled, obviously, by what has been a very predictable economic and fundamentally positive corporate profit climate, and don't know necessarily where this might lead. I think at the end of the day, the saber rattling will lead to a diplomatic outcome that will resolve itself positively and be good for risk assets. But in the meantime, obviously, it's inserted a little bit of volatility into the market.
Yeah, a little bit of volatility, which is subsiding somewhat today. I mean, Nicole, I think one of the important things for investors to remember in these situations where you have these geopolitical events is, yes, you may see some market activity based upon that people get a little bit more fear in them and you see some bearishness, but that tends to subside once the event is over.
Right, they react to the news and the headlines, and we had 3 days of high threats and concerns pertaining to North Korea, and so we still
have those threats and concerns.
Yeah, but what's interesting is they digested the news, and traders have actually said specifically they want to see if there's any developments pertaining to Guam, and that will be the next set of news to react to. I mean, we're not getting big news at this moment other than we're ready to go if needed. So you had 275-point sell-off, and investors are doing what they've done over the last year or so, which is cautiously buying on a dip. They're still going to gold and treasuries today, and it's all been on pretty average volume.
You know, Mark, how are you feeling overall about the market right now?
Trish, in general, we feel pretty sanguine. I mean, the fact is the fundamental backdrop, not just domestically, but globally, is pretty good. We've got synchronized global growth. I think the U.S. economy is sturdy. Well, you have relatively, benign inflation readings that you had mentioned earlier, which is going to give the Fed no reason to accelerate the rate hike cycle that they anticipate that the economy is going to allow them to proceed on here going forward. And to me, that's kind of a Goldilocks environment that is a good setup for corporate profits to continue to grow, perhaps not quite as steep of a pace as we've had the last several quarters, which have been outstanding, but grow nonetheless. And when your alternatives are a 2 handle on a government bond and still less than 1% on cash, it makes stocks
you mentioned
inviting.
Interest rates. It's amazing that you're seeing this market power forward. This, to me, is very good, because my frustration over the last however many years, Nicole, has been the market highs that we were seeing were not based entirely on fundamentals, but rather on a Federal Reserve that was so accommodative, printing money continuously, leaving interest rates at record lows for so long that I really questioned whether the valuations were based on anything other than, the sugar high of the Federal Reserve. We're in a different environment, however, now, where they have indicated they do want to raise, and they've raised a little.
Right, and you're absolutely the high C, the Kool-Aid, whatever sugary drink you want to call it. That's exactly true. Money was free, people were saying. And the only place to make money was certainly right in the equity market. You weren't making it in bonds or abroad. But what's interesting now is we got in our latest CPI and PPI reports, and now at this point, Fed funds futures are showing a likelihood of raising rates in December of 44%. That's lower than it has been in past months. So we'll see whether or not they actually make a move. But we had so many reasons, right? The Fed, Trump, and some great earnings over earnings season that fundamentally have been a good recipe as well. So we've had a good trifecta there.
All righty, we're going to leave it there. Let's hope it stays in the green as we head into this Friday afternoon. Thanks so much, guys. Good to see you, Mark.
Thanks,
good to see you, Nicole.